Let's talk money.
Hello and welcome to a brand new edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. Now, those of you who follow equity markets here in India and around the world would know that the AI theme has been dominating investor psyche around the world, particularly in the United States. Stocks that are relating to AI or deep tech, analytics, they've been really going through the roof. We all know the story of NVIDIA becoming the most valuable company in the world. Now, the issue here is that in India, while we have a large number of traditional IT services companies, do we have enough options when it comes to cutting-edge technology? If yes, and what are these options? How should we look at them as investors? And how should we ensure that our portfolio is in sync with the time when technology is the name of the game? Well, that is exactly what we're going to discuss on the show today. Investing in the innovation theme here in India. Well, helping us demystify some of these aspects are Shreyas Devalkar, Head of Equity at Axis Mutual Fund, and Ashish Naik, who is a fund manager and actually manages Axis Mutual Fund's Innovation Fund. Gentlemen, good morning. Great to have you with us. Thank you so much for joining in. And I want to start with that opening question, actually. Shreyas, with you first. This last 1 year has been a year of patience for the investor. He's quietly sat and looked at the screen with very range-bound returns in the Indian market while watching the NASDAQ gallop away, the US market gallop away. So what are the lessons from this 1 year, and what are some of the investor behavior trends that you picked up?
Sure. So yeah, it is 2025. Actually, it witnessed a mix of euphoria and consolidation in the equity market. So typical of market consolidation phase it is. You'll notice that in large cap, actually, it gets unnoticed. One part is the large cap, it gave you a 12% return YTD versus mid cap 4% and small cap was down 2% YTD. I'm talking about the frontline benchmark indices. A key dampener was actually the reciprocal tariff by US on India. And after that steep tariff, there was also increase in the tariff. Apart from that, though, the investor sentiment actually got boosted because of the GST rationalization. And there was a festive season, the current festive season. It has been so far record-breaking for many industries, not all, while it has signaled a strong consumer demand. So this has been really good news. As far as corporate earning cycle is concerned, I think that earning downgrade cycle has now bottomed out. So though the earnings are subdued relatively in this quarter so far, but the downgrade cycle which started almost 1.5 years ago, I think that is broadly getting bottomed out. So India, because of this underperformance YTD actually, and we have seen, and as you highlighted, the AI theme globally, India has actually underperformed by 20 to 25% compared to Asian market, as well as obviously the US market. And hence the relative valuation of India has emerged now relatively better. So in response to this market volatility, what investors have done, actually, investors, especially when you analyze the flows of the investor, investors have diversified into multi-asset allocation funds like gold, as well as silver and multi-asset allocation fund. Industry has launched multiple products, factor-based products, quant model, narrow thematic products, fund of fund structures in both active and passive space. So the exposure to equity-oriented mutual fund might have got slightly trimmed, but it got into the other schemes, which I talked about, and overall exposure remains good. And that's where, despite the trimming of the exposure to the equity-oriented funds, the passive fund gained, this multi-asset allocation funds gained, and overall SIP of the system remains intact. And that indicates a sustained confidence as well as disciplined investing by investors.
Okay. Ashish, what about you? How has this year been for you as a fund manager? And what are the interesting trends, nuggets, investing patterns? What did you pick up? What's the highlight of 2025 for you?
Sure, thank you so much. So yes, I mean, from investing in this year, one has really seen how euphoria, as Shreyas mentioned, was there at the start of, let's say, earlier year, and over the years, things had actually subdued in the Indian markets, where investments were actually going lower from the public investment side, and the other side, expectations were much higher. From there on, with the global situation on the tariff side being worse off, also meant that there was some more pressure from that end. Over time, what we saw is that there was resilience in the consumer demand, especially which was visible post the GST rationalization and the festive demand, which has again kind of picked up sentiments across various sectors. Even when we look at some of the specific areas such as multi-asset fund, which incidentally I also manage Nexus, there was obviously a lot of interest. The returns in the gold and silver were quite surprisingly positive, and that really helped the fund. On the innovation side, if I have to look at also, there were many companies that have started to get listed in the Indian space, not just this year, but over the last 2, 3 years. But how they have evolved and sort of matured is an interesting phenomenon that we have seen in this year, especially.
And we'll talk about this. We'll talk about some of these businesses which are looking interesting, which are adopting innovation in various ways, and how to analyze a lot of this. Shreyas, I want to start with an even more fundamental question, right? As investors, there's a tendency to chase returns. Everybody has this major FOMO when you see a market running away and you realize, oh, I don't have those kind of stocks. So now, first of all, let's talk technology in a broad sense, technology or cutting edge innovation. One way of playing that would be straight away to buy the NASDAQ, right? I mean, you have ETFs here in India. You can just go invest in the US market, in those US stocks. Is that the approach? Should we be looking at Indian technology and innovation bets at all? Or is it too late now in the game? I mean, where are we in the cycle? Because globally, there's a debate playing out, whether there's already an AI bubble which is about to burst.
Sure. So always when it comes to such themes that the bubble, etc., that when it comes to valuation, definitely a lot of froth may be there in most of the spaces. However, this space is here to stay, that one should recognize. And its applications will evolve. First, now we are in the phase of actually developing the deep tech and the large language models. There is a investment which is going to happen in the infrastructure, including data center. So we are in that investment space. And I think a lot of material you already must have seen and read regarding how the amount is humongous. And compared to that, if you want to generate a return on capital employed, and especially when these investments are going to be depreciating, right? So unlike any other plant and machinery, it doesn't depreciate so fast. While here, whatever investments are there, they are going to depreciate a lot. And accordingly, if you want to generate a return, it will be a challenge. However, there are companies who are funding this out of their existing cash flows. Most importantly, what they are trying to do is they're using their current cash flows so that in future, their ability to generate revenue as well as ability to sustain improves, and that's where the entire focus of the market will be. So initially there may be euphoria in some of these spaces, but there may be more focused approach which will emerge once this valuation bubble dies down, in particular areas like chips as well as the developer of AI, and obviously the backward investment into the data center. So this entire revolution, in my opinion, will have a role to play in investors' portfolio. But having said that, as of now, yes, there is sort of high valuations as of today.
Okay, and that's why we have to be extra cautious. So with that caveat being placed on the table very, very carefully, let's now go step by step. Now, Ashish, the first issue with finding some of these ideas in India is that you don't have a direct one-on-one play. I mean, you don't have a company that's making these big GPUs, graphic processing units, or these big, supercomputing chips. So there's no direct play. But then there are indirect players. There could be vendors that in some way are part of the NVIDIA ecosystem. So where do you start looking when you're talking cutting-edge technology, deep tech, AI, etc.?
So completely agree with you. Yes, I mean, India does not have a global deep tech or AI investment plays or the wave that we have seen in some of the other countries like US and China, where we have seen hundreds of billions being poured into these foundational AI models and various deep tech platforms. In India, what we have seen, or Indian companies have actually lagged on the R&D side. There has been, in terms of the tech, there is a services-led mindset and also some level of risk averseness in terms of the funding ecosystem. So, for instance, if you look at, let's say, 2023, India just got about $1.1 billion in AI funding in terms of the entrepreneurs. And that is also to do with the fact that we do not have that many highly profitable internet companies, as Shreyash mentioned, who are able to pump in capital into these kind of innovations. But that does not mean that there is no promise. We also have a great digital infrastructure in India, the India Stack. We also have a vast talent pool as well as a growing ecosystem of startups. So at the end of the day, what it will come down is with the help of the government's AI mission, which is about $1.2 billion being spent over the next 5 years, we should start seeing more and more industry partnerships happening, especially starting with the unlisted space where the foundation is being laid for the probably a GPT movement or a DeepSeek movement for India. We are seeing sectors like, as you mentioned, data centers. There are companies in edtech as well as fintech who are adopting to AI quite strongly in terms of applications. What we should watch out for probably in terms of emerging plays are maybe AI infrastructure plays, localized models, as well as sector-specific applications. So it will be a play that will happen over a period of time, which will depend on policy support, maybe some level of private capital appetite for deep tech, and some level of cultural shift in terms of long-term innovation. So it's a mix of all. It's yet to happen.
No, absolutely. But it gives us a starting point, and like you outlined, some subsectors of innovation and deep tech. So let's do one thing. Let's talk about the valuation debate for each of these subsegments. Like you said, there could be data centers, there could be EV, there could be several other facets of it. Fintech, there is obviously the internet companies, there is food tech, food delivery, and quick commerce, so on and so forth. So, Shreyas, let me open with you and maybe Ashish chip in on this. As stock pickers, when you look at these individual buckets, which are either internet-related businesses or beyond internet businesses, where do you see excess euphoria, where you would be cautious, and where do you see some value, some visibility of growth, and at least reasonable valuation or not over-the-top valuation? So if you could go segment by segment. Shreyas?
Sure. So when it comes to a space like innovation and investment into this, it's very difficult to find out, so to say, growth at reasonable price. It's probably growth is there everywhere. As far as valuations are concerned, you have to make a judgment based on multiple factors. So just to give you example, in some of these spaces, especially the application space, more so. So you take a consumer tech company, which is applying tech to develop a consumer tech model. Now, in most of these spaces, what is happening is these companies are initially not making money. What we tend to observe is these spaces where there is loss-making phenomena is there. During that phase, these companies are mostly in the unlisted space. While in the listed space, what is happening is the companies are using their cash flow or potential cash flow from the existing businesses and they are reinvesting into the new. So when it comes to the valuation, we have to be very careful on the path to profitability. So in most of these cases, what we look forward is the path to profitability, and that path to profitability depend on what? It depends on one, the intention of consumer to pay, because initially, as you're observing, that consumers are not paying for most of these things. So the intention of consumer to pay, one. And secondly, once that path starts for few companies in the vast sector, and like here we can use the example of quick commerce industry, even in the ride-hailing industries, and that also we have seen that when few companies start going to that path, the others who tend to fall out, and then there emerges a structure of duopoly or so. So this is what the end game we need to watch out for. Now, whether that end game is near term, 2-3 years, in that case, the argument of yes, there is a reasonable value that comes in at 4, while in other cases, the valuation look really high.
Okay, all right. So, well, determining whether something is overvalued or adequately valued, that will always be a tough call. But we'll keep discussing this as we go forward. We'll ask Ashish which are some of the themes, these innovation themes that he likes the most. And then the big question for us investors. Do you play this through regular, diversified mutual funds? Or is the theme ripe enough and interesting enough to actually play via a dedicated thematic sectoral fund? We'll discuss this on the other side.
Let's Talk Money.
Welcome back. You're with us on Let's Talk Money. And this week we are discussing the innovation theme and whether we as investors need to look at it far more closely, whether we need to have a more dedicated approach towards investing in companies that are leading innovation here in India. And as you've just heard the experts tell us, innovation can have several definitions. It's not limited to AI or to internet commerce alone. So on that front, Ashish, let's get your thoughts, because you track the whole gamut of all these companies. Which sub-segments of innovation are you most bullish on?
So as you rightly said, it's not just a theme about new age companies. It is cutting across so many futuristic fields which are at the cutting edge, including AI, fintech, EV, digital platforms, clean energy, and advanced manufacturing. So when we look at our Axis Innovation Funds, it also has exposure not just to the Indian companies, but also to global companies, where we invest across the chain, starting from core tech disruptors. So for instance, if we take a pharma company in let's say, the developed markets like US, who is working along with Indian pioneers such as the CDMO players in India, you're playing across the supply chain. And that's how you really make the most out of the innovation theme. Where we do not have access to some of the companies in the Indian market, you can take that in the global side. Having said that, this is not just about the innovators or the new age companies. We also look at the enablers of innovation. So what we mean by that is companies who are, for instance, into semiconductors, battery technology, chemicals, R&D plays, for instance. All of these are enablers for, say, innovation in electric vehicles or, for that matter, electronics. Similarly, one can play with aerospace or defense component suppliers at the high end of technology. And also, if we want to play the green economy-led innovations, we can look at companies in the recycling space or even solar component manufacturers. On the other side, we can also look at companies who are adapting to innovations. So one of the examples that comes to mind is the Indian financial services space, where there are companies who are leveraging the digital infrastructure in the form of the India stack as well as UPI, and they are able to transform their businesses. So all of these kind of include the gamut of innovation theme.
Okay, so those are all the examples of the innovation theme out there. But then really the question, gentlemen, that as an investor, I'm okay to take moderate risk, but I don't want to get too caught up. And like you said, many of these companies may not even be profit-making at the time that they start their listed market journey. So Shreyas, if, not a conservative, but say a medium risk investor wants to have a portfolio which is future ready, then what should he or she do? How do you add this piece of innovation to the portfolio?
So definitely the thematic fund like innovation fund definitely add a value to it. If you look at even Axis Innovation Fund, we have exposure to even foreign equity into it. So some part of the exposure actually is given to these new age technology businesses. Broadly, when it comes to the exposure to this space, what we believe is the investors should have exposure, but in a limited manner, and to the entire thematic space. It is not only about innovation. So that thematic includes multiple narrow themes. And in that context, in my opinion, innovation is definitely a broad-based theme wherein we touch upon right from consumption-oriented investment companies to EVs, to some other companies which are into the capital goods space, and obviously the foreign activities. So you get a great diversified exposure in this kind of thing. So one should have exposure to this, but in my opinion, in a limited, to the limited extent in the thematics.
Okay. Ashish, what would you say? What should the right mix be? And also talk to us about the right amount of allocation, because you don't want to have too much risk in the portfolio as well. So would you argue, you manage the innovation fund, of course, so would you argue playing it through the thematic route, and if yes, then you should be capping it at what level?
So absolutely. So the way Shreyash mentioned, I completely agree that overall thematic basket of the equity portfolio should not exceed about higher double digits, maybe 15% of the portfolio. Given that that is the prudent amount which one can have into some of these sectors. While innovation can give us exposure to high growth disruptive sectors, and while maintaining diversification and also managing volatility. What is also important is the time period that we have when we are holding these investments in the portfolio. There should be a time investment horizon of at least 5 years. The reason I say that, and as you rightly mentioned, some of these businesses are still evolving. They are still not yet profitable and not yet generating sustainable cash flows and profitability. So to that extent, there might be entry points which might require, let's say, higher valuation entry points, and then over a period of time that gets factored into the stock. So to that extent, to scale these longer gestation periods, one needs to have a slightly longer period of time horizon so that one can ride the valuation cycles and capture the full potential of this compounding growth.
Okay, fair enough. And it's important to keep those risks in mind as well. And on that, Shreyas, to sum it up, I mean, if you talk about the riskometer, right? So if we were to map the innovation theme vis-a-vis other thematic areas like consumption or let's say defense or manufacturing, then does it carry higher risk because it's a very futuristic theme? And if yes, finally, what are the checks and balances, and what are the final tips that you'd like to leave our viewers with, investors with, for investing in innovation?
Definitely at current juncture, since globally innovation-oriented stocks has gone up and the valuations are high. So standing today, definitely the valuation risk is one of the at the higher end when compared to the other themes as such. The good part is, as I highlighted, that unlike a consumption or manufacturing or any other narrow thematic like defense, etc., this theme has investment across the multiple segments of economy, right? From consumption to, so it is well diversified compared to other thematics or narrow thematic schemes which are available in the market. However, because there is an element of innovation and there is an element of valuation re-rating which has happened over last 6 months to 1 year, because of which we definitely carry a valuation risk. And that's where Ashish explained that the time horizon for such investment in such theme should be up to 5 years.
Okay, all right. That explains the concept quite well, the risks and the potential rewards as well, if one looks at investing in the innovation theme here in India. Gentlemen, thank you so much. This was a very helpful conversation. Good to have perspective on this subject. Well, with that, we're out of time on this edition of Let's Talk Money. Thank you very much for joining in. Keep sending us your feedback, your comments and queries. We'll see you again next week.
Let's Talk Money